So I think everybody's trying to figure out what to make of this market right now. I want to ask you not about an investment, but a trade. Right now, it seems like one of the more attractive trades in the market right now with the government shutdown, trade tensions, also questions about the labor market would be VIX futures. Do you see it that way as well, or are you seeing some other opportunities with all this volatility?
Right. I might say that that trade is happening in spite of those seeming headwinds, Frank. What we're entering into is a cyclical recovery, and we're past the speculation stage of that, where beta matters, and we're getting into the true cyclicality phase, where that operating leverage starts to matter, where that high EPS variance starts to matter, driven by both monetary and physical stimulus. And so I think we will see leadership change. And I think that that favors those high quality cyclical sectors like materials, like transports, as you mentioned before, and like the financials, as we're seeing manifest itself in their earnings.
Yeah, you mentioned materials, industrials, and financials, obviously cyclical sectors. Again, we heard from Jay Powell yesterday, seeming to strike a dovish tone. Is this simply a play on the idea that we're going to get more rate cuts, maybe as many as 2 more this year, or is there some other thesis here?
I don't think it's based on that alone. When you look at globally, where most of the GDP or the companies that represent the bulk of GDP are positioning, about 90% of the world's GDP is in a stimulating phase. Only 2 major countries, Japan and Brazil, have a posture of cutting at this point. And so I think what we're looking at is a global cyclical recovery, not just in the U.S., driven by both monetary and fiscal policy. And as we well know, sometimes that takes a while to play out. And so I think that we'll be riding this tailwind 12 months from now.
So you think we'll be riding this tailwind 12 months from now. Are you concerned at all about growth? Again, the government shutdown now in a second week. We've hit on this before. Government shutdowns, they have a negative impact on quarterly GDP. Also the idea, at least right now, that trade tensions could jam up, just the global economy, not just the U.S. economy, and certainly trade here in the U.S., increase potentially costs for a lot of U.S. businesses. Is it time to start worrying about growth?
I think it's time to start worrying about growth, but not for the reasons you just indicated. As you well know, I am always concerned about all of those things, including inflation. But I think we need to put them in context, right? So take the shutdown. The 35-day shutdown, 2018 to 2019, cost us $3 billion in GDP. If you think the shutdown lasts twice as long, quadruples the GDP loss, that's still only 4 basis points on a $30 trillion GDP. So while that matters in the short term, and it matters acutely to those who suffer most, in the long term, it's a speed bump. And I think most investors see that. For tariffs, the same. I think U.S. and China have both seemed willing to walk back from the cliff, as makes sense, being the 2 largest economies and 43% of world GDP. So volatility around it in the short term, but in the long term, just not enough to derail the GDP growth that we anticipate, particularly given physical stimulus around the world.